I certainly do. So I believe it's stuck in the middle. So the S&P 500 has been range bound and we're struggling to find direction. And the lower part of the range is really a base forming. And so I look at three things. One is the big picture, which is the 200 weekly moving average. I look at the slope of the line and then where the index is above or below. And then I also look at the 26 and 40 weekly average to give me the trading cycle, if it's bullish or bearish. And that's really important because that's 2 3/4 worth of data. And as investors, we look at the market from a quarterly basis. So if we see consistent closes above the 26 and 40 weekly moving averages, and that's indicative that from quarter to quarter, earnings cycle to earnings cycle, we're actually seeing price increases. And so that is consistently happening within the S&P 500. It's early stages, but to continue seeing this bottom, I want to see the continuous closes above the 26 and 40 weekly moving average. That's around 39.50. And as long as we have those continuous closes, our next milestone, which is where we're having a very hard time closing right now, is that November lower high of 4,100, and then followed by that, I need to see the January 30th high of 41.95. So it's important to form a base to see those levels consistently closed above, but even more so, I need to see that November lower high to be overcome, because of course the way that we define a trend is lower lows is going to tell us the bear trend, and then higher lows, higher highs would shift us into a bullish trend. So I need to see those levels overcome.
And just like the gentleman to my left, who I'm going to bring back into the conversation in a second, you're looking at the equal weight index too. Tell us in what way does that stand out to you?
Yeah, it's extremely important. Farrell rule even states that a broad-based rally holds more strength. So the equal weight is showing early signs. We've only closed last week above the 26 and 40 weekly moving averages, and we actually fell below it today. So I'm looking at 63.20 as our Jan high target that we need to overcome, but right now it's 58.40 that the equal weight index needs to overcome to have those consistent 26 and 40 weekly, so 2 3/4 closes above to indicate a base, which is a positive trading cycle. And it's so important to take note of that, because even if you look at the equal weight or the broader S&P 500 or the S&P 500 from early 2000, you can see that we consistently closed above these weekly levels at the end of bear markets. And the inverse is also true. Notably the dot-com bubble, great financial crisis, all of the above.
I feel like she's speaking your language, Mr. Santoli.